So paying attention to the PDRAs highlighted the last time in the last two videos on this channel, we have the daily buy-side imbalance residing over there, and of course I highlighted all these other PDRAs. And so far we are on Wednesday, well 30 minutes before Wednesday, but the daily candlestick has already closed for Tuesday and we technically in Wednesday now. So the we can see that even though we wicked through the daily buy-side imbalance, the bodies of these candlesticks hasn't closed below the buy-side imbalance, and so far it's been respecting it to some degree, including the new day opening gap from that point, or the volume imbalance from that point stretched out in time, respected it perfectly. And to illustrate that, I'm just going to highlight it like so, which obviously now becomes the volume imbalance on the daily chart, even though it's technically a new day opening gap. But yeah, so price has been respecting bullish PDRA so far going into the FOMC. I am cautious about one thing though. I'm looking at this order block residing over here. I know right now we don't have any reason to come as low as this level, as this swing low. We have no reason to trade to this level, but I'm also going to be paying attention to this bullish order block on the daily chart, because anything is still possible, especially when there is a high degree of manual intervention and manipulation in the market. It's possible to spike all the way there, tap on it, and immediately reject from there, because we need liquidity to purge more liquidity. We need momentum to build up in order for us to go up. So I believe we've already built it yesterday on Tuesday, creating the low of the week on the dollar index, and I don't want to see another low created beyond this point. So my target still remains the same, this buy side liquidity. If it shows willingness to go above that, then of course this is my next target, which is going into the monthly sell side imbalance that we've been eyeing for so long, of course. See, so it goes into the monthly sell side imbalance. So this is my target right now, the buy side liquidity that we've been looking at for so long now. So going to euro. On euro dollar, ignoring this vertical line for a second, we can see essentially the same thing has happened. We have a sell side imbalance residing over there on a daily chart from there to there, and yes, we've traded above it, but we have not closed above it. So to me it's still valid, and if I was taking this trade and if this was a 5 minutes chart, technically my stop loss would be above the high that created the fair value gap, remembering that there are 3 candlesticks involved when a fair value gap is created. In this case it's 1, 2 and 3, this one being the one that creates the imbalance. My stop loss is usually at this high or the swing high that started the imbalance in the first place. So if my stop loss is here or here, so far it would not have been tagged, and we are still looking for lower prices on the euro. Something interesting I wanted to highlight quickly on the euro though, on the 1 hour chart, is this exact order block. So looking at price action and how it played out yesterday, we notice at this point we have a bullish order block, right? We have a bullish order block residing there with a fair value gap on the right of it. So when 8:30 opened up and spiked higher and coming back down, we did not respect this order block. We did not respect this unicorn setup, as Michael teaches it, ICT. Of course, I'm going to link the channel in the description as well for those that need an in-depth research on ICT's concepts. So we have an order block residing there, a fair value gap right next to it, a perfect opportunity to see longs coming up. But we did not see that. We purged this order block low. We did not only take out this swing low and the order block, we also closed below it. So at this point, for me, I would now validate this as a valid 1 hour market structure shift. Again, this, I have highlighted what I consider to be a valid market structure shift in the video where I pointed out how to do a proper top-down analysis. So at this point, I would consider this a market structure shift. I will link the video in the description on what I consider to be a valid market structure shift below. So this to me is a valid market structure shift, and I paid attention to the fact that we did not respect this order block. It now becomes a breaker bar to me. So from the top of this bearish candle to the bottom of it, I would consider the whole thing to be a breaker. The difference is that when I'm looking at breakers, I don't only look at the low to the high. Most of the time I find myself looking at the body to the high. So I look at the actual bar itself. Looking at the actual bar itself, I looked to see if we can get an opportunity. So here in the PM session after lunch, we went higher with the 130 TSO opening at that point, and we traded above it, giving me an opportunity to re-enter sales. Of course, we had a 5 minutes market structure shift and an entry here with all this move, which is why I have this short, what you call this, tool from TradingView. So I was looking at this breaker bar specifically going into the closure of the London session yesterday, this entire zone. I know there's too many illustrations on my screen and I'm going to clear them all in a moment, but I just wanted to quickly show what I was paying attention to on the 1 hour chart. So going into FOMC, I'm looking to see if this specific 1 hour bullish order block that turned into a breaker bar can hold going into FOMC. Of course, looking at this from the 1 hour perspective, we can imagine a trend line forming going to the upside, right? Basically what ICT labels this as is a phantom trend line, which is a low resistant liquidity run, right? An LR, which is what I'm always gonna label it as. Of course, if you have questions about this, please do ask. It's whenever a trend line forms, which most retail traders, even though we are also retail traders, but most retail traders would consider them to be a form of support or resistance. So in this case, from Thursday actually, not last week, we've been taking it as support, and I believe FOMC is going to be the tool that they use to finally purge it and clear this sell side liquidity residing at this low. So of course, an easy example was literally right here at the beginning, at the second week of September, from the 7th till the Thursday of that week on the 14th. So I believe something similar might happen here, and I don't think we'll create a new high of week. We may spike up a little bit, but not too much. And at that point, I'm expecting us to be already sitting at probably at this low. And whenever we do spike up, we don't go too far up. We only move maybe up to this point, then fall off. Looking something like so. So I'm expecting by 11 a.m. New York local time to be residing around these lows. Maybe not quite taking out this sell side liquidity yet, but when FOMC comes out in the PM session of New York, of course, we spike up a bit, not too far up, maybe even as far as taking this high. I don't really mind. Then I want FOMC the remainder of the day to just clear this sell side liquidity. So that's what I'm looking at on the euro. And speaking of the euro, let's move over to GBPUSD, the pound. Very similar structure on GBPUSD. Of course, not quite the same because we have not taken out this order block, but the pound has generally been weak, weaker than the euro. Euro managed to take out this high, I believe, or residing around these levels, but the pound didn't quite get that far up. It only took out these highs. As I mentioned in my previous video, If you guys remember watching the previous one, I did mention specifically that I was looking at the 3-hour fair value gap, inversion fair value gap, which is also in the 9-hour bearish order block. If you look, there's the order block, it's there. The inversion of the 3-hour is inside of this order block, which is there. So that's where I used to add more shorts, more sells. So going back to the 1-hour chart, I would like to see us close below any of these swing lows. Unfortunately, during lunchtime to PM session, we created a swing low at this point. So I'd like to see an hourly candle close, not only cross this low but also close below it. So one thing special about the pound though is the fact that we have an event at 2 a.m. New York local time, which is over there. 2 a.m. CPI announcements coming out, and then 2 p.m. we have the Fed's meeting and statements and everything. So I'm going to be paying a lot of attention to GBP because of the CPI numbers coming out. So that's all I'm looking to going into FOMC, just looking for more sells. The last thing I did want to point out was that I know everything has been playing out exactly as planned, but I did make a blunder on Aussie dollar, on AUD USD, because I had the same directional bias using the dollar. Of course, we're looking for bullish dollar. I was obviously looking to sell AUD USD, but I over leveraged. Being honest, I over leveraged when I shouldn't have. When I was paying attention to this 3-hour order block, that turned into a breaker because we closed below it on the 1 hour, obviously at this point. So I looked to sell when we got back into this range. I sold at this point, and yeah, then price did this during London session yesterday and even took out a previous high. Did not even hold this fair value gap, this sell side imbalance residing there. So of course I bailed on that, which shouldn't have been a problem, but I over leveraged on this position, so it essentially took all the profits I've made in the last 5 trading days. So basically in the last trading week, it's all in vain. Euro GBP, I am not really that enthusiastic about this sell, even though I still want to see Euro GBP fall off, as I've mentioned already, using true openings. Nothing much here but true openings being my only reason to sell, because of course we have Q1 there, which is X, Q2 accumulation at a new high after sweeping a previous high. Q3 I was expecting an expansion to the downside, but now we created yet another high. So I'm cautious about this. I'm not that enthusiastic when we took out this high. I don't know if we want to make a new high then fall off. I'm not really sure, but right now I'm basing this trade purely on true opening. We are above the true month opening. We are definitely above the true day. We were above the true day opening on Tuesday yesterday. So there's a lot of reasons for us to be going down from here, being the manipulation phase before the distribution. But we will see how this pans out. I'm not over leveraged. I did not make that mistake on this trade. And finally, Euro JPY. Also, I was looking to buy Euro because of the reasons I highlighted on my dollar intra-week dollar outlook video. I was looking at the COT data, interest rates differentials, and came to the conclusion that Euro JPY, Euro JN might give us possible long-in opportunities. And of course the arrow shows what I was looking for, printed exactly as I wanted it to print. But I preferred to see a closure above this sell side imbalance residing here from this candlestick's low to this candlestick's high. We have a sell side imbalance. We have not closed above it yet. I would have preferred to see us close above it, then use it to act as support for higher prices. So that's what I was looking for ultimately on this. And also I'm not over leveraged, and I think I've already moved my stops to break even because I entered with the 4-hour buy side imbalance all the way down there. So let's move down to the lower time frame to actually show the entry. This buy side imbalance, price tapped into it. I had an alert at this point and I entered the trade. So my stops are already at break even, perfectly break even, but I'm looking to see on the daily chart if we can close above this. If not, it's gonna be a riskless trade. We're in a riskless trade anyway. I'm not being charged spreads, swaps or commission on this, so that's fine. So that's all I'm looking for. USD CAD, I had a trade entry yesterday, but I did not execute on it because of the Aussie dollar loss that I took. Because if we go on the weekly, I think my arrow is probably still there. Yeah, so I did send it out that I was looking at the consequent encroachment of this weekly buy side imbalance, which is also inside of the consequent encroachment of the 9-day inversion fair value gap. There were many confluences here that made me think of looking for longing opportunities, and when the CAD red folder news came out, we spiked lower into the last quarter, the 25%, then started rejecting from there. So I wanted to take this trade, but I didn't have the psychological confidence after taking the losses that I took on Aussie. So I did not point this arrow all the way up because I was paying careful attention to this sell side imbalance that they may use to respect price for a little bit of a correction, maybe a pullback or consolidation. So I'm wary of this. Of course, I'm looking for bullish dollar. I'm looking for us to go all the way up, and this was a perfect entry in my eyes to actually get in on the trade, but I already explained why I wasn't able to hop on that trade. So I'll be looking to see if they do give us an entry. If we get a 1 hour entry on this inversion fair value gap or this balanced price range, I might take it after clearing all this sell side liquidity from lunchtime till the beginning of Asia session. So I'd like to see if we can come trade down below this, come into this inversion, and then push higher. If we go below this inversion, then I'll be looking at this inversion to hold price. But of course, below this point, I don't want to see a new low made. So this would be my invalidation point. Not even a closure, I just don't want to see any new low created. So my stop loss will be perfectly at this low. Then yeah, we'll see how FOMC, we'll see how London session, New York session, and FOMC finally at the end of the day plays out. For now, that's all I have. Good luck and good trading.